Hello, family. Thank you for joining me once again. It is Tuesday night, the last night of what, four live streams in 5 days or three live streams in 4 nights. So, thank you for rocking with me and joining and being part of this experience. When you come in, if you don't mind, tap on that like button and just share with us where you're from. Also, if you have a question at any point, put before you type it in, put a Q in front of it so I know that it's a question. Now, to those of you who don't know me, I am Sir Ashley. I am a realtor and investor here in the Carolinas, and I have this YouTube page talking about money, real estate, and personal finance. And today, I want to talk to you about a loan that gets overlooked quite often. It is a USDA loan, 0% down, and I want to talk to you about adjustable rate mortgages. I do have a guest on today. I will introduce him in just a second. Now, if you haven't been watching, last Friday, I did a live stream talking about just the facts regarding this real estate market and what is going on. On Sunday, I brought you Kina. She's a mortgage broker here in Charlotte. And we talked about how it is a positive market or the upside to being a buyer right now. And then yesterday, I brought you Joy Bailey talking about the do's and don'ts of buying a home in mid 2022. And today, I have Dan Frio. A lot of people reach out wondering, where do I get my information from? Who do I watch? Who do I learn from? Well, he's one of them. He is on YouTube, but I've called him, picked his brain, and spoke to him multiple occasions. And he is a wealth of knowledge, and I want to share that with you. So Dan Frio, be sure to check him out on YouTube. His page, I'll put a link to it in the comment section. But here he is right here.
Thanks, brother, for having me. And you can see who makes all the money here. You got high def over here, and then the guy in the basement over here. I'm just teasing.
Well, thank you for joining. I know it is. I know you have a lot on your plate between between being home and then you're going to your vacation homes and in Florida and stuff.
You had to throw that out there.
So
that's where that's why I can't afford a nice camera. I'm just teasing. But thank you so much for having me. The nice thing about what I love about your channel is you just speak the truth. There's so many people out there that are just, it's negative. And you know how it is. You put up a thumbnail or whatever that's just the world's burning down and you get a ton of clicks. But if you try to put the facts out there or something like that, a lot of people just don't like to hear that. So thanks for having me, at least, and I'll answer any financing questions that anybody has or whatever you do have.
Perfect. Thank you. And yes, no, negativity sells. You see the tabloids in the grocery store. Negativity drives the clicks, drive the views. But I don't want to feed into that. I believe there's a lane for channels like us, that people that want just the facts without any real spin. And I'm always a glass half full kind of guy. If I wasn't, I wouldn't be here right now.
Yeah, seriously.
So that's just how I am.
Yeah.
But I did want to jump right in and talk about USDA loans. Okay. Now, USDA loans are 100% finance.
Right.
Can you tell me what it actually is and how can one qualify for it, or is it dependent on the person?
Absolutely. Yep. So the number, there's two main pieces of the puzzle that you have to qualify with. I'll say three because the credit score is there too, but your credit score is irrelevant unless you meet one, is the property in a USDA zoned area. So you can go to USDA.gov. You can scan through. I would do I would just Google search. That's probably the best way to do it. And just put in there, address USDA eligible. It'll launch you right to the USDA site. And then you plug in the address and it'll basically come up and say, yep or no. Okay. So that's number one. We're doing a loan right now, right outside of San Diego. That's USDA. I was like, when they first called, I'm like, I was like, one of my loan officers brought it to me. And I'm like, they're outside of San Diego. There's no way it's USDA eligible. Pull it up. And I'll be doggone it. It is. So number one, the property has to be basically zoned in a USDA area. And you can get that from USDA.gov. Just Google it. It's the easiest, simplest way to do that. The second thing is your income. There's income limitations. So it's based on the county, the state, the county, the city. It basically, there's a rundown. So what you'd want to do is just do the same thing in Google. Just Google USDA income requirements and just feed right into the URL that it brings you to. Then it's going to ask you some specific questions. Make sure you answer those precisely, because it's going to ask you how many members of the family you have and all this other stuff. And almost all the websites, to remember this piece of the puzzle, when it's asking you for your income, it's your gross income. Okay. It's not your net. The gross is the income prior to taxes and all this stuff being taken out. So you might be in the USDA zone. You might have good enough credit to qualify. And then you go in there and it's like, I missed it by $20. And I kid you not, it is that specific. If you are out of the realm of the income requirements, there is no loan there. Okay. But the benefits of it is they're huge. Basically, it's 100% financing. Other than VA, there's no other way to get USDA financing. So those are the biggest keys that I would stress, is just Google searching those and checking to see if the property is eligible and if your income is eligible. But they're fairly simple loans. They're not too tough. I did a condo. You can do condominiums. Condos, I did a condo right outside of where I live. I'm outside of Chicago, but there's a property, it's place about 30 minutes west of me. I did a condo purchase with USDA. So 100% financing on a condo. Wow. It's nuts. So a lot of people just don't get it. And a lot of times on the realtor side, I might have some questions for you after the fact. Okay. But a lot of times on the one side of the spectrum that I see a lot of times is, sellers, they don't like VA. They don't like FHA. Yeah. How do sellers feel about USDA, or do they really care?
So I've been educating my sellers personally regarding VA and USDA. And they're coming around as far as being open to both of those. FHA, not so much yet, but VA and USDA. And it's just having a conversation with my sellers. One, they have this preconceived notions about VA loans taking longer than conventional loans, but I've seen VA loans get done in just as much time, if not faster.
Yeah, it's the same thing.
Yeah, it's the same thing. And why would we want to penalize those that served our country?
Ding, ding, ding. That's what I keep saying. I'm like, so let me ask you a question. I'll turn the table on you if you don't mind.
Most definitely.
What's the hang up on a VA loan? I mean, on a VA loan, because in the past, the seller had to pay, maybe a point. They'd have to pay most of the title fees. They'd have to pay for the appraisal. They really don't have to do anything now. And we fly them through just like they're any other loan.
It is realtors not being educated. Okay. That's what it is. It's just the industry and realtors not being educated and just regurgitating what somebody told them 10, 15 years ago.
20% down. You need 20% down. I still get that from kids.
Yes.
Millennials. They'll be like, I don't have the 20% down on. I'm like, where'd you get that? My mom. I'm like, okay. That's why we're doing this.
Yeah, exactly. So feel free, leave a comment if you have any questions. Put them in the chat, but put a Q in front of it so I know that it is a question. And you said right outside of Chicago, right outside of Charlotte. There are tons of areas that qualify for USDA. Literally Mount Holly, which is about 15 minutes from the city center of Charlotte, qualifies for a USDA loan. How do I know? Because I've sold one of my properties prematurely. I sold a property in 2019, and it was to a USDA buyer. That's 2018.
At half the price of what it would be today.
Exactly. And the thing is, so you get your Zillow notifications. I got notified last year that she sold it for almost double what she bought it for.
You guys are blessed. I mean, other than I live in Chicago, so don't turn the dial, but we have no appreciation here. I bought my house 21 years ago. It's a little bit higher than what I paid for it 21 years ago. Now I'll have people that are, like you said, she bought it in 2019 and she's doubled her money. Our real estate taxes here, I don't mean to be complaining about this. Yeah. I mean, they're the second highest to New Jersey. So if a starter home here, say 250, you're probably looking at 8,000 in taxes. So that's why I got a house in Florida.
and I was going to say, for tax purposes, do you live there 6 months in a day? Yeah. Yes. And so people, we talked about it a little bit yesterday toward the end of the live stream. I talked about the tax code is made to benefit property owners and business owners. And if you do not have both or one, I say both, and you should get both, you're not taking full advantage of the laws and benefits that is afforded to you as an American. So I say get on the property ladder sooner than later. And this USDA loan, 100% financing, zero down, is an excellent way to do so.
And there is PMI on there now. There wasn't years ago, but it's minute. So if the property is in USDA and you qualify, there would be no other way that I would go about doing it. Do you mind? You probably, and I know you've had other lenders on here and everything else, but if you don't mind me just real quick going over how loans go through the system real fast, just
please break it down.
Here's the biggest thing that I can explain. When somebody's applying for a loan, we all use the same tools to get them approved. Believe it or not, there's three entities out there now that we're talking about USDA. USDA uses a system called GUS. There's not a ton of USDA mortgages out there, but all lenders are going to use Fannie Mae and Freddie Mac. They're the two entities out there that everybody you probably heard of, and if you didn't, you didn't. But here's how it works. It's pretty simple. You apply for a loan. So let's say with me, I pull your credit just like everybody else. Then I upload it into Fannie Mae and Freddie Mac. You only really have to do one. Yep. And then basically it's like when you apply for a credit card or at Christmas time, you went to wherever and they 10% off if you get this credit card. You plug in your data and 30 seconds later, you're approved. That's basically how mortgages work. Yeah. So, but the thing is, it's the data in has to be accurate for the data out to be good. That's basically how the approvals work for everybody. So I always tell people, if you got approved at Chase, I can get you approved because I use the exact same system as they do. Yeah. So that's basically how easy it is. So we upload all the data into the system. It then spits out, and when I say it, that Fannie Mae or Freddie Mac, their website will kick back an approval and say, here's what we need from you to validate that loan. So we will approve it. So the basic things you have to validate is you put in there that you make 50 grand. Well, I need a pay stub and W-2s to prove you make 50 grand. Yes. You have 20,000 in the bank. I need a bank statement. That's about it in today's world. So it's pretty simple. So then when people say, VA loans, I don't like VA loans, they take too long. It's the same system. I use Fannie Mae, Freddie Mac. It spits right out and it's approved.
Exactly.
And then FHA, same thing. Exactly the same thing. But the one caveat that I want to be clear, and this is where a lot of people don't understand, a thing called overlays. So here's an overlay, and then I'll make it this simple. For example, the biggest one I can explain to everybody is FHA. FHA you can truly do a 500 credit score with FHA.
Yes.
But I challenge you, go through, we don't have phone books anymore, but if you had a phone book, go through the phone book and call every lender out there. And I bet you can't find one person that's going to approve your loan with a 500 credit score or do the loan. Yeah. But it exists. So what that is, that's an overlay. So if you've ever been turned down by a lender because they said, you don't have a 620 credit score, or you don't have a 640 credit score, or something like that, please educate yourself, because a lot of times people don't know what to do.
Mm-hmm.
That is a bank's overlay. So for example, FHA, I'll go back to that. 580 is required to put down the minimum, and the minimum's 3.5%. But if you have a 500 credit score, you can still get a mortgage, but you need 10% down.
10%. Yep.
So that's where a lot of people just, they're like, they don't get it. And think of it this way. How many houses do you buy in your lifetime? 2, maybe 3. So you don't do it often. So you call the bank or the lender that you're usually comfortable with, and you have a 580 score, and they have an overlay of 620. You apply, they turn you down. Most people don't know what to do.
Don't know what to do.
Like,
yeah.
Well, I can't get a mortgage now. Well, that's mainly what my job, and you're doing a fantastic job at it, trying to just educate people to say, guys, there's stuff out there for you. Just learn it, or at least get a hold of somebody that knows what they're doing. And that's why I do my channel, and that's exactly why you do your channel.
Exactly.
So, but I just wanted to lay that out there, because so many times people, they just, especially when I asked about the FHA piece, I don't want, I won't take an FHA bid on my house because it's FHA. There's nothing wrong with an FHA, other than the appraisal is a little bit tighter. They have to do certain things on the appraisal, but other than that, it goes fast. There's nothing wrong with it. It's not, it's not a deadbeat person, but okay, that's what I know. That wasn't.
No, I'm with you. No. I appreciate you going. I appreciate you going over that, and that is one of the reasons why I tune into your channel every single day, is because you take that time to educate and break down the minute things that many of us in the industry take for granted.
Yeah,
like we just take for granted because we know it.
Well, then I'm sure you get it too, but I get all these comments. I'm FOMO. I'm this. I'm that. I'm pumping real estate or whatever. I'm transparent. I say these on videos. I don't care if you buy or not. I truly. That's up to you guys.
Yes,
seriously. Should you have children? I don't know. It's up to you and your family. So should you buy a house? I give you my 2 cents. Yeah. I just posted a video this afternoon. Rents. Zillow just came out with the rents year over year are up 16.8%.
I saw that 16.8%.
So one of the things is, when people are saying, do I buy in 2022? Do I rent? I always say it's up to you and your family. And what I would do is, if you're not going to be in the house for at least 3 years, well, because we don't have the appreciation you guys get, but I wouldn't buy. I would not buy. That's just me. But if I'm going to be there at least 3 to 5 years. I'll probably be a buyer, because there's a lot of benefits. Because when you're paying, even if you don't buy a house, you pay rent, somebody owns that building. So you're paying somebody's mortgage.
You're paying somebody's mortgage. Mortgage. You are paying it. And I say the same thing. If you're going to stay in there at least, I say 3 to 5 years, you might as well just buy. Because rents, at least in the Charlotte area, are higher than mortgages anyway right now. It's getting close. More with the interest rate creeping up recently, it's getting close, but it's still, rents are still higher. One I want to shout out, how do you say that name? Ozahar. I'm awful. So thank you. You've tuned in, I believe, every night. So thank you. If you have any questions regarding what we're talking about today or right now, is USDA loans, 100% finance. They are out of the city center, rural area loans, to where, again, 100% finance. Only other way you can do that is with the VA loan. So it's an opportunity for a lot of people to, again, get on that property ladder. If you're having trouble saving huge sums for down payment and everything like that. And once you look at it, once you see where the areas are, it's not that far out from the city center. Again, I told you 15 minutes away from the city center of Charlotte and Mount Holly, there's an area that qualified. In Union County, Monroe, parts of Weddington qualifies. And actually new construction, a whole bunch of developments going out there, and they qualify for USDA loans. And now their preferred lender isn't going to tell you that. Their preferred lender isn't going to tell you that.
Can I dive down that road just briefly?
Most definitely. Please.
So I did a YouTube live last Thursday. So I do one every Thursday night, 7 o'clock Central Standard Time. I think it was last week, I get tons of extended locks. I was thrown for a loop when I found out how many people were actually building, because you see all these reports and you're like, okay, I had, after that report, I did a video talk on extended locks. When you can lock, when you should lock, whatever. I got several people closing like this month, and they're still in the high 2s, low 3s. Ooh. Why? They did extended locks back in December and January. They listened. So I can go down that realm. But the problem is with the builders. So we get a lot of builder loans. And the first thing I ask is, here's what happens with the building loans. They go to the preferred lender, and they're going to get about a $5,000 credit. Okay. Now, I've talked to these people at the builder.
Yeah. Break it down. Please break it down. Because
here's what they'll do. They'll push you off and wait till about 45 days before you close. And then they'll allow you to lock. But, and you don't scan all over the place, watch my channel, watch this, check the comments. Here's what they do. And I talked to a couple of these guys in the evenings from home on cell phones. They wait till the last minute. Then they come back to you and their rate is higher than the norm.
Yep.
And so then they'll say, well, you're getting $5,000 from the lender or the builder. Let's use that to buy down your rate. Plus we have our application fees, $1,200, and our underwriting fees, $1,500, which is way out of the whack too. So they're sucking all the money, because you got to remember, in most cases, this is like, if you use Pulte, it's Pulte lenders in a lot of these cases. So it's this entity and this entity. It's a ledger. It's a ledger.
Exactly.
I'm not kidding you. That is going on. You can check out any of my videos and you'd see strands of people explaining that. So I always say, why don't we lock you now? So if you're out there building, you can lock. We have programs up to 180 days that are free. There's no, I reference those as an insurance policy. We lock you in today. So basically the rate is today's rate plus 0.5%. You're going to say, well, that's pretty dumb. Why would I do that? Well, did you see what happened in the last 60 days? Rates went from 3 to 5.5. So, but here's what happens. We lock you in at that rate. It's high, but it might not be high considering next year. But if rates go down, okay, we can either float you down with that particular lender, or I'm a broker. I deal with 130 lenders. I have your package. I have your mortgage package. I pick up your mortgage package and move it over to another lender and place it in there, and we close it. So you're shielding yourself from the upward potential of rates going up. There also is, I don't know, you're probably aware of this, there's what's called a lock and shop. We have programs that'll go 90 and 180 days. I actually got one last night about 10 o'clock. I locked them in last night at midnight because it's Fed day tomorrow, so I don't know what rates are going to do. We locked them in last night on a 90-day lock, and they're looking for homes. As long as they find and close on the loan within 90 days, they're good. So it's basically a lot of this stuff is out there is an insurance package. Exactly. Think of it that way on the interest rates.
Yeah, no, I told 2 of my clients earlier this week. So today's Tuesday. So yesterday and today, like, you might as well go ahead and lock, because we know the Fed is going to come out and then raise it 50 basis points. We don't know 100%, but I'm willing to. I'm willing. I don't really bet too much anymore.
Yeah, I don't either.
but I'm willing to make a gentleman's wager.
I'll bet you a Big Mac.
Exactly.
Well, we got the same bet, because I'm with you on that one. Yeah, it's 50. It'll be 50 days. This is where I have a degree in economics, and I love this stuff. So I'm terrible in math. But I love all the statistics behind things. So they're going to raise rates 50 basis points. Another thing that a lot of people don't realize is that's the mortgage rates aren't going up 50 basis points. The Federal Reserve controls what's called the federal funds rate. That's it. And it's interbank lending. No consumer really goes and is affected directly from the federal funds rate. But it'll trickle down through the economy. It's just when a bank, at the end of the day, the bank has to have a certain amount in reserves. So let's say, for example, Citibank needs 10 billion in reserves, and they got 9. Well, they need $1 billion fast. So otherwise, they're insolvent. So they go out and get $1 billion loan overnight, pay that fee, and move on. So that's all the federal funds rate is. But it is basically a seed that plants and starts to also trickle out through the economy.
So
I'm sorry I talk so much.
No, you're good. You're good. This is why, again, I learn from you. So please share.
Sure.
Mac, South Carolina there's tons, most of South Carolina qualifies for USDA loans. So please be sure to check out that loan type. Feel free to give my team and I a call to help you find a home. And Dan, you're pretty much licensed everywhere.
Yeah. Shortly I'll be licensed basically in every state in the country.
Yeah. So I will put your contact information in the description of this video for people to reach out to you, and your YouTube link for your YouTube page. And trust me, he is very responsive, because I reached out just as a random person, and he got back to me, and then I told him, hey, I have a YouTube page as well. And I've sent clients his way. Takes time out of his day, his team's day, to go over different things. And actually, I think you helped out one of my clients recently. Yeah, Nico did.
I think we had 2 or 3 of them. I think Nico's working on them right now. So yeah. What drives me nuts, you should not get, not a return phone call back, not a response on an email. That drives me absolutely bonkers. Yeah. So if you go to you can Google me, and I've done this for 33 years. I'm old. I'm old.
I got a couple of grays in there. I got a few in there.
I just got my hair cut for you. But my email, it's really simple. It's dan@therateupdate.com. And my channel is therateupdate.com. So it's really simple. If I can be of any help, but if you're the one big caveat, I know we're talking about USDA and ARMs, but if you're building a house, please protect yourself. But I'll warn you of this. You can't 180-day locks. They're free. So there's no skin in the game. And why that's a big piece is once you go over 180, even the lenders don't want those loans right now. Yeah. So if you go over 180, most of the time what the lender wants is they want 2.5% of the loan amount paid to them up front. So you end up closing with them. I don't want you having any skin in the game, because if rates plummet, I don't want to be at their mercy. I want to be able to move you into the best program at that time. So that's why I really promote the 180s. Yes, there's 270-day locks and 360, but they get really expensive. Just think about it. If you had to pay 2.5 points, that's what it would cost you to lock in today. But the rate is today's rate plus.
Real quick, tell us what points are. Like, what is 2.5 points? What does that mean?
Good. So 1 point, when I reference that, is 1% of the loan amount. So if you're looking at, say $100,000 loan, 1 point would be $1,000. So they're requiring in some cases, 2.75 points to lock in their rate from 270 days to 360. Well, let me put it in perspective. That's a lot of money. Okay. A lot of money. You can most likely wait till that time. And even if rates are 7, you can probably use the 2.5 points to buy it down what you would be locking in today anyways. Exactly. So that's why I'm not a proponent of that. I'm a proponent of a 180-day lock, because think it's 6 months and you have no money up front. There's no cost. There's no obligation. So I hate to say it that way, but I mean, I always tell people, this is what I would do. And I always guide people to that. Doesn't mean that that's what you have to do, but it is truly, and I give you my word, it is what I would truly do. And so there's no reason why I would guide you down the wrong path, because if I did, people would post all over my social media that this guy's he's a whack job, and I never get any business. But I had one guy, I got to say this. I had one guy about a month ago. He was ticked off for some reason, and we can't make everybody happy. I apologize. And he said, I looked all over the internet to find something on you to kind of, I couldn't find one complaint against you or any bad news about you. I was like, that was a surprise. I was like, that's good news, but that's how you have to operate. Otherwise you're going to sink.
Exactly. Real quick, I want to get to this comment. Yes, Winston-Salem and the Triad area, tons of USDA communities and areas. Actually, there's some new construction in Pafton, which is just north of Winston-Salem, that qualifies for USDA. So yeah, please reach out to us. I know we've talked about it in the past, but when you're ready, reach out to my team and I have team members in the Triad area, and we can find a home and connect you. You can connect with Dan and get your loan and everything. So definitely reach out to us. Now, I do have this question. I haven't read it, but it talks about, does the standard of, we talked about this briefly. Does the standard of 20% down apply to people who are buying their second home, or can you pay less than 20% on your second home also? Now, please break it down and tell us where this question goes off the rails.
A lot of times is the first thought that a lot of people get is, how much do you need for the down payment? And it always triggers back to 20%. Okay. And here's also another overlay. So if you're new to what we're talking about, it depends on basically the lender you call. So that's where you got to be very careful. That's why I'm a broker. I'm set up with over 130 lenders. Many times you think, and I agree, it's too many. But you need a stable of lenders because they all have their own niche stuff. Okay.
Exactly.
So this is even a hard question to answer because there's a lot of what they call non-QM programs coming out.
Let's not get into non-QM because I know I'm with you. That's the way down the rabbit hole.
Yep. But so a lot of those factors, but in most cases you can get away with 10 or 15% down. You don't need the 20% down. The entities what they did is they jacked up rates on second homes and investment properties to kind of deter that.
Exactly.
It hasn't deterred it at all. No. I mean, between the extended locks and the long-term locks that we have, and then the investors buying houses, we're busy 24 hours a day.
And I tell people people are like, now, if this doesn't apply to you, just brush it off. But a lot of, not you, I'm talking about people that are watching.
Sure.
A lot of first-time home buyers are hesitant, like, is now a good time to buy? Now is a good time to buy. Whereas you have investors buying like mad, and you have people that already own properties buying second and third homes like mad. So if you see people that have something that you desire doing something, to me, that just means, you should be taking note. Like, if they're doing it, they must know something. So I say, get off the fence and put your desire and want into action, and let's find you a home.
So here's the shoot back that you're going to get. Well, you're a realtor, you're FOMO because you're a realtor and you're pumping real estate. That's what you get, right?
Yes. And with that, I will say, I could care less if you buy a home. I got into real estate as an investor when I was practicing law. And I was able to stop practicing law because of my investments in real estate. I'm good either way. If my team sells, if I sell, as long as my cash flow is over whatever my expenses are, I'm good. So, and I tell people that have reached out to me and want to put an offer on this home or that home. I'm like, no, it's not a good time. Don't do it. Or that's not a good property for you. I turn away people more than I would say the average realtor, because if it's not a good fit, if I wouldn't do it for myself or for my sister who's a single mother, if I don't believe it will be a decision for her, I wouldn't want you to do it. So
here's the question I always come up with is, let's throw out buying a house. Let's throw that out the window. Okay. Yeah. The prices are way too high and interest rates are too high. Well, I just posted a video today that rents went up 16.8%. So houses are too expensive, rates are too high, and rent's too expensive. What do you do? You see where I'm going with this? So that's why it's up to the family to decide. But you just said in your area, it's cheaper to buy a house on your monthly expenses than it is to rent. And then also, I always use this analogy. Let's say you bought the house and it didn't appreciate in value a penny in 15 years. You still have a ton of equity because now your house is worth, let's say, $300,000. Your mortgage balance is down to $150,000. So you did nothing other than just make the payments, and you got $150,000 in equity.
And you would have been paying monthly payments and rent either way. Like you're going to have to pay for housing.
Right. That's my whole point. Yeah. I want to speak on housing. I don't care if the house goes up for sale. Mm-hmm. It's going to sell, right? Somebody's going to buy it. And then people are like, investors shouldn't be allowed to buy anymore. This and that and this and that. Well, you have the opportunity to buy, but you don't want to buy. So as the seller, what should you do? Because I have people posting on my channel all the time. Well, they should have investors not being able to buy homes. Well, one, that's not the how we do it.
That's not American. That's not American.
Yeah, and it's just, but you get where I'm saying.
Yeah, I'm with you.
Okay.
Real quick, talking about there's certain areas in Gaston County that are USDA. Mount Holly is in Gaston County that I mentioned. Is USDA approved. Certain areas of Mount Holly and Gastonia, outside of Gastonia, will qualify for USDA 100% finance.
The biggest caveat is your income. Just make sure, Google search, how much can I make, or what's the USDA income limits? Make sure you go to that website, fill out the questionnaire, and it'll tell you if you fit or not. And again, it's your gross income, how much money you make prior to taxes and everything else, because that is the one big piece of the puzzle that most people get, they don't qualify because of.
And another thing I want to how do you feel about this? If it's a married couple, right, and there's an income limit, just one person qualifies for the loan?
Household income.
Household income. I got you.
Yep. Okay. A lot of grants go by that too. Yep. If you're looking for down payment assistance grants and things like that, a lot of them are household, not who's on the application.
I got you. And I don't want to get too in left field, but the grants here in the Charlotte area are worthless.
They're bad.
They have
99% of them are.
They have these caps on it. They'll give you $10,000-$15,000 for new construction if it's under $285,000. Well, that hasn't existed in the last 5 years. So,
or here's some of the big ones. They'll give you 3, 4, or 5% of the loan amount. Okay, but then the writer of the grant that's part of the down payment assistance program, they'll take like a $1,200 fee.
Yes.
And then on the lender side, most of the times the lenders, they're going to charge you 1 or 2 points because the loan is actually going to that grant company. So you just ate up 3 of your 3 or 4 points that you were getting anyways. So I had a gentleman call me this morning and I'm like, and it was $100,000 home. Their grant that they were looking to get at a specific bank was 3%. So it was $3,000. The grant company charged them $1,500, left them $1,500, and their lender was charging them a point, which is 1%, which was $1,000. So it left them with $500. So I'm like, and it's a higher rate on top of it. And then if you ever refinance or sell the house, you have to pay the money back, which you got $5,000 or $6,000. You really pocketed $500. It's stupid. And I explain these to people, and I'm like, it's a great point. It's a great selling point for us to get you to call. Hate to say it that way, but I always tell the truth and tell you, I wouldn't do I wouldn't do this. There's one out there basically that's worth a darn, and it's hard to get because the income qualifications are tough.
And that's the thing. Like, it's the income qualifications. You have to qualify, but if you have that income level, if you meet that income level threshold, you can't really qualify for a loan, for a mortgage in the price point where the homes like they sell at, they trade at right now. So it's one of those.
It's tough out there right now. I get it. But I just try to debunk all the naysayers and the everything, because my biggest point, and I'll leave it at this, is I want to speak housing. And you as a family, you have to decide what's best for you. It doesn't matter. You can watch every channel you want, but it's you're the one that has to make the mortgage payment.
Exactly. And real quick, I have Jay Wall saying he wish he could lock. He's under contract for new construction since December, with no closing date. That's
I get 20 of those a day.
That's new to me.
Every day, that's all I get. What I was saying is last Thursday, I did the extended lock video. I got 16 applications on Friday.
Wow.
16. Because people were like, I didn't even know it existed. My lender is telling me I have to wait till 30 days prior to close to lock you. Why? Because then they got you.
They can get you. They got you.
Yep.
And a lot of
you can't shop. You can't do anything.
What I've seen is a lot of builders here in the Charlotte area, and even I can say in upstate South Carolina as well, is they won't give you the closing date until about 2 to 3 weeks out, to where you can't like go with your outside lender. Not saying you can't, but it's a tough ask for them to get everything done in 2 weeks.
That's planned.
Yes, it's exactly. It's not on accident. It's not on accident. And I know when my team and we film all our properties for new construction every other week at most. Typically, we try to do every week. So we know when the cabinets go in. So we know, okay, so we should be about 45 days from close. We need to get it locked in. So, but if you just wait for if your realtor or agent is not on top of it, and you're just waiting for the builder to tell you when your closing date is, it's going to be too late, and you're going to be stuck with their lender and that high rate with all their fees.
If you already broke ground, that's what I was saying. We have people that are starting to come up with closings now. That are in the 3s in rate wise because they did the extended lock. So if there's any possibility of you having the house completed within 180 days, I'll preface us, call us. We would love to lock you in, at least explain it to you how it works. And basically it's today's rate. I think on a 180-day lock, it's today's rate plus 0.25% in rate. That's it. There's no fees. There's nothing else. And you can lock up to 6 months. And it's huge. Like I said, you were shocked just now. In the last 30 to 45 days, I've been just dumbfounded how many people are building. And they're like, now I have people coming back saying, can I walk away? I'm like, I don't know. They can't. Just think about it. If you were looking to buy a $550,000 home, you got pre-qualified last November at $299. Now the rate's 5.625. That payment's $600, $700, $800, maybe $1,000 higher. You might not qualify.
Exactly. April Thompson, if my house is $400,000, how much would 2 points cost?
It depends on the loan amount. So it'd be 2% of the loan amount is what what the cost would be. Now, I'm not saying that every loan has 2% or whatever. What we do, like I said, I'm a mortgage broker. I deal with 130 lenders. And the reason for that is everybody has their own little niche. One company is great with extended locks. One's fantastic with USDA and they're terrible with VA. Another one's FHA, so forth. So it's when you call just your bank, they have one program, one rate.
They're going to fit you in. They're going to fit you into that box.
And there's nothing wrong with that. There's nothing wrong with that. But you just, my analogy is if I want to buy a car, I don't really know what I want. If I go to the Chrysler dealership, all they got is Chryslers. Well, I want to go to CarMax and they got everything. And that's exactly what I try to explain to people. So it's when we talk about points, it's basically just take out the point piece of it. It'd be 1%.
Perfect. Now can we transition to ARMs?
Yes.
That works. So ARMs are adjustable rate mortgages. And if you've watched my channel, I've cautioned. I've said it's a tool, and I don't believe that first-time home buyers should use an ARM, just because unless you're savvy and just cognizant and fully aware of what you're getting into. Now, Dan, I know I'm not gonna say you have a different opinion about ARMs, but you've enlightened me about the possibility and how ARMs are different now than they were back in 06, 07.
It's not even. So when people now say, the world's going to crash like it did in 2006 and 8, it's not even apples. It's apples and elephants. So I'll just give a quick brief history lesson. What really happened back in 2006? I've been there. I was there. I've been doing this since 1990. So
before you get into it, we have about 66 people watching. Thank you all for jumping on. I appreciate you spending your Tuesday evening with us. If you don't mind, hit that like button for us. Got about 44 likes. Just hit that like button. It does us a tremendous amount of gives us a tremendous amount of value to let YouTube know that we're providing valuable content. So please continue, Dan.
Okay, so here's what happened back into about 2000. I'll start there, and I'll make this as quick as I can. It basically came out and said everybody in the world, everybody in the country should own a house. I don't agree with that. But so they made all the programs simple and all this other stuff. So what happened was at that time, things started slowing down. So they came back up with more and more programs. So one was created was an adjustable rate mortgage. Okay. But caveats of that thing was this. It had a teaser rate. It had the option. I'll say it had optional payment plans for you. Okay.
Yes.
And then the rate would adjust. So here's how this worked. You'd go in and let's say the going rate at the time was 5. Well, you'd get a rate at 2.5, interest only. So all that you had to pay was the interest on that loan for maybe 1, 2, maybe 3 years. Okay. So for 2 or 3 years, you had some crazy low interest rate, way below market. You only had to pay the interest on the loan. Okay. So everybody was like, this is cool. On top of that, they came out with programs that were called NINAs. No income, no assets.
Yes.
Equals disaster. Okay. So basically, we were doing loans for secretaries working something, nothing against secretaries. Okay. But making $150,000 a year because you didn't have to prove it. It's just, I have great credit and I make 150 grand. Okay. So cool. So you get into this house. And again, you have this rate that's probably about half of what the market was where it was, and you're only paying interest. And there's a whole bunch of other pieces of that puzzle. So time progresses. It goes 2, 3 years, 4 years. Now your rate starts to move. Okay. So it went up. Most of them would go up 2 or 3%. So you went from 2.5 now to 4.5 or 5. Okay. Mm-hmm. On top of that, now you also have to start paying principal and interest. So that added another $400 or $500 a month. So you could see, so that's what happened there. And again, remember, it started out as some crazy low teaser rate. So we knew every time, but every time that the rate would adjust, it was going up 2 or 3%, whatever the max would be. Mm-hmm. So within 5 years, your rate went from 2.5 to possibly 7 or 8. That's what happened. Then what happened is everything started to pop. Yes. And then one person couldn't refinance because those teaser rates were gone and all that other stuff. Yeah. And then Ninas started going away and home values started to stagnate. Well, people would refinance out of these things and because the property values are going up and up and up. But then when the properties stayed stagnant, nobody could refinance anymore because they were already maxed out. Then you had houses starting to go down. Okay, so now the person, they can't afford the payment. They can't sell the house. Then you hear of what's called short sales. Yeah. Now they get in line for modifications. Then they try to short sale. And then nothing works. So now they get foreclosed on. And the whole bubble popped. Yeah. Today's world, this what's going on right now is crazy. It doesn't have anything to do with, everybody says, well, the Fed dropped rates to all these crazy low numbers, and that's why everybody's buying. Well, another piece of this is, how come rents went up 16%? I mean, if it's completely the Fed's fault. So that's basically what happened. So what was learned from back then was there is no teaser rates. Mm-hmm. There's no option payment. You have to pay principal and interest and taxes and insurance and everything included in your payment. And so you get rid of all those buffers. And now there's no Ninas. You truly have to qualify.
Yes.
The loans today, they're good loans.
Exactly.
Yeah, today's loans are very good loans.
Yes.
Okay. So back then they were junk. And I saw it. I lived it. Okay. So that's basically, so when people come to me and say, the ARM rates. So here's what I'll say about the ARM rates. Unless there's a big spread, meaning the 30-year fixed today, I think is 5.55, right in that range. If I personally could get a rate, a point and a half lower than that on an ARM, I would think about it. I would only think about it if that rate was good or locked in my comfort level, 7 or 10 years.
That's what I was. Thank you.
I wouldn't take a 3-year, 5-year, 7 or 10 years. 90% of mortgages don't last 7 years.
That's what I was wanted to when I think about ARMs, and again, it's a tool. I think at least 5, like nothing lower than 5, but 7 years seems perfect in the sense that the average person, at least statistically, you're not staying in the home for more than 7 years on average. But then most, you're not gonna keep the same loan. You're probably gonna refinance in those 7 years. So that gives you some security for a longer period of time, to where I tell everyone, no matter what you do, have an exit strategy before you even begin. Right. So know what you're getting into. And 7 years is a healthy amount of time, and it gives you time to play and figure out what you're doing before that ARM adjusts.
Yeah, my first loan when I got married, we bought a house, and it was an adjustable rate mortgage, but it was 1989 and rates were 11, 12, 13%. So we got an adjustable rate. Would I do one now? No. I mean, me personally, the house I live in Chicago, I'll live here forever. And the house I got in Florida, I'll have that forever. So I have no desire to, I'm not going to move. I'm not going to sell anything. I'm on this side of the lifespan. I'm going downhill now. But but for a young couple, it's your starter home, and you still don't have kids, you're just married or whatever, you're probably not going to be there 5, 6, 7 years. You might think, oh, this is going to be my home. You'll outgrow it, but you might not. But so what I always talk about is the spread has to be good enough. So let's say, for example, a lot of times on my show, I show every morning where the adjustable rate is for the 5-year, because that's the information that's provided from me from the source that I use. Yes. I wouldn't do a 5-year. So when you go out to 7 or 10 years, the rate is almost comparable today to what the 30-year is. So I wouldn't do, even if it's a 0.5% lower, I'm not doing it because I don't want that risk, 7 or 10 years down the road. That's me personal. But again, if you're a young couple, completely different story.
No, I totally agree.
So ARMs were the one tool that basically blew up the whole world back in 10, 15 years ago. Well,
it sounds like it was not just the ARM, but all the overlays, the sweeteners,
yes.
No income, no verification, and all that, and teaser loans, where at that point I believe you had like 228. So you had like 2 years with the
228s. Yep, 327.
Exactly.
Every loan was a 228.
Exactly. And that's where people got in trouble. And I'll be perfectly honest, my own parents got in trouble with that. And that's one of the reasons why I got into real estate, because I saw my parents go, and I told you I'll get into my story eventually, people that watch. I got into real estate because I saw my parents go through that, and I couldn't do anything to help. Yeah. And it caused me to, I'm a curious person, and it caused me to take a look at real estate and to see how can one benefit. And then once I actually became and had income to be able to, invest, I just opened the door for so many other things. So no, that is what shocked the market and put everybody behind with the ARMs early in 06, 08 and everything.
That is the tool. That is the one piece of the puzzle that, and that's why I get in debates with people now. They're like, "Oh, it's the same thing as 2008." I'm like, it's not even close. It's not even the same conversation. Today's data is much different than where it was.
Yeah. Now, I'm not sure if we have enough data for this question, Metro Elite. Are you making 67,000, or do you have 67? Like, what is your income? What price range home should you look at? We need to know. We need a little bit more data, if you don't mind.
Here's what I would come back with. 67 is good income.
It is.
It depends on what other bills you have. If you have no debt, God bless you. You could afford probably almost anything that you'd be looking at. Now, do you have a car loan, credit card debt, 100,000 in student loans, and then no. I mean, it's those are one of those questions. It's like, I'm not a financial planner, but that income isn't bad, but how much debt do you have other than that? Because I'm always, here's what I do when people call. I never qualify them for the maximum they can get. My first question is, it's basically fact finding. When people call in, I'm like, what are you comfortable paying?
Yes.
What's comfortable? And then you got to talk them into reality. It's like, well, $800 would be nice. I'm like, it'd be a nice car payment, but not a house payment. So then when you start talking all these things, it kind of gets in realm. But there's a lot of people out there that have, God bless them, they have no debt. And then there's other people that are just buried. And that's where,
and we touched on it last night, talking about car loans, how that is the killer for a lot of people trying to get qualified and pre-approved, is their debt to income and just a high car loan payment. When you're looking at and student loans. Yeah.
I honestly, 15 years ago, 10 years ago, I want to say, I probably didn't even see a student loan on anybody's credit report. Now, I mean, it's just pages. I mean, you look at somebody's application, it's not uncommon to see, seriously, 8 to 10 student loans, each with 10 grand a piece.
Yeah. I'm not gonna lie. I had 6 figures for law school. I got 6 figures in student loans for law school. And so no, I get it. Oh
no, I'm not saying that there's anything wrong with it.
It was necessary evil.
Yeah, it's just one of those, it's like a mortgage. I mean, if you can buy a house for cash, God bless you. You know what I mean? But if you got to finance, you got to finance it. But the student loan debt, that'll be your next bubble. And this isn't the show for that. But that's that's crazy, that debt.
Now, one thing, well, I guess we can go down a little bit, is we've been, I say we because as somebody with student loans, we've been spoiled the past, 2.5 years with it being on pause. How has that been affecting or impacting approvals and everything, as far as, because student loan payments have been on pause, or how do you calculate
You still have to count them. So here's how it works. As long as you have a balance, okay? When we first started the show, we talked about this, putting loans through Fannie Mae and Freddie Mac. So there's 2 entities out there that do basically approve all the loans. So when you apply, any lender will send it to each entity, their computer system, and it just spits back an approval. Fannie Mae requires that you use 1% of the balance of the student loan debt in the payment. So let's say you have a $10,000 student loan debt. You have to use it's 1%, so $10.
Yeah.
Or $100 or whatever the math is. Freddie Mac and FHA, if you apply for those 2 pieces of the puzzle, they only require you use 0.5% of the balance of the student loan. But that's how they qualify. So even if you're in deferment, if you're in forbearance, you're in anything, there is still a payment allocated based on the balance that you have.
Exactly. Perfect. Metro came back with some more information. Income is 120 a year. 67 saved.
God bless you, man.
Yeah.
You're doing good. 35,000 in debt. It could be, I don't know what the debt is, but it's student loans, car payments, or whatever. So you're thinking it might be $500 a month. So you're making 10 grand a month and you got $500 in payments. You're in good shape. I see a lot worse every day.
Every day.
People need housing, and it is a bad position to be in right now, because rents and homes are both, they're up there. I get it.
Exactly. And that's why I wanted to talk about USDA loans, because typically the further you go out from the city center, the more affordable the properties are. If you have a property, actually, I mentioned this the other day, but in Charlotte, the builders make the same homes, right? If you have a true home builder here in Charlotte, same floor plan, it's going to cost you $600,000. If you go 50 miles outside of the city center, it's going to cost you around $250,000, $300,000. So, and see if it qualifies for a USDA loan, 100% financing. That is a win-win for you because yes, you'll be having to make the commute, but a lot of people are working remote now. So what I've seen is people that got a USDA loan, 7 years ago, where that location qualified. Now they've built up, and that location has infrastructure. It has a shopping center. It has everything to where they don't have to come into Charlotte anymore.
Right.
Like they have everything right there. So it gives you an opportunity to beat everyone else and get in on the ground level and get 100% financing. So that's why I'm a huge advocate of this, for you to look into it and just see, hey, would this work for you?
The offset of that too is if you're a veteran, please look into it. There's veterans that I've talked to that's never used their VA benefits. And it's like, are you serious? One, the government loans, which is FHA, VA, and USDA, usually notoriously they have lower rates than conventional financing and everything else. So one, you're most likely going to get a better rate. No money down, but you can put money down. In VA, there's no PMI. USDA has a little PMI, and then FHA has larger PMI. So VA is.
I didn't know that VA didn't have PMI.
No, none.
Wow, I didn't know that.
Just so you know, too, if your buyer or your homeowner is disabled, there is a bunch of perks when it comes to VA. They don't have virtually no closing costs. And a lot of times they have no. So what happens with VA is there's what's called a funding fee, an upfront fee. So when you're doing an FHA loan, there's an upfront fee of 1.75% of the loan amount. VA, it ranges on how many times you used that benefit. So if you're looking to refinance with a VA loan, you might want to check the other programs. So don't just be inundated with VA, because VA, if you're refinancing for like a second or third time, they charge you 3.3% of the loan amount as a fee that just goes to the VA. Yes. So I'm very tight with my money. So when I look at applications, I always say, here's the other options we got. Here's why I would suggest those, but you're the boss and I'll do whatever you want me to.
It's our job to advise. They can choose what they want to go with. Yeah. So, but no, if you have a question, please leave it in the comment section. We will. I'm gonna get you out at an hour and 10 minutes. So we got about 8 minutes left. If you have a question,
I'm sorry, my picture is so bad. I'm in my basement, and usually the lighting's not this bad, but I don't know what I did.
No, you're good. You're good. Leave a comment. Yeah. And also, we got about 90 people watching. Wow, thank you again. Feel free, hit that like button. It greatly just helps out the channel. Hit that like button. It takes no time at all to do so. And
let me ask you a question, if you don't mind.
Yes.
Oh, go ahead.
No, go ahead. I'm listening.
Why do sellers not like FHA?
The appraisal.
Okay. Makes sense.
The appraisal. They can't really contest it. They can't do anything. And I don't know what you've seen on your end, but recently, for the past, 2.5, 3 years, I haven't had an appraisal come in short, even when I had clients offering crazy above asking price. But in the last 2 months, I've seen appraisals come in, about $20,000 short. And if that was an FHA, that's you kind of stuck with it. So that's the biggest.
Here, I don't know if you know this piece too. If an FHA appraisal is done on a property, that FHA appraisal stays with that property for 6 months.
Exactly.
So one of the biggest things that I usually hear, or my assumption was, I won't say a little bit. They're quite a bit more skeptical when they're doing the appraisals. They go through and they want to make sure that you have the GFI outlets, and one of the things they have to do too is they have to do I think it's they call it a shoulders in or heads in or something like that. They have to actually go in the attic and look around to make sure there's no mold. So those are specific areas, but very rarely do we have those come back. So that's why I was just wondering why. My assumption was the appraisal was a little bit tighter, but people just have the assumption that if you went FHA, you got bad credit. And yeah. So if your credit scores are lower than 660 or lower, you might want to look at an FHA because, and you're not putting down 20%, because your rate's probably going to be lower, and your PMI is probably going to be lower. So just an FYI.
And another reason why a lot of people, at least in the Charlotte area, a lot of sellers really don't pay too much attention to buyers that have down payment assistance monies is because their inspections are a lot more stringent, especially when it's a seller's market. If you're telling me I have multiple offers and one person has a conventional, they're going to buy it as is and everything like that, but then this other person has, let's just say, FHA and a down payment assistance program combined with that. But that down payment assistance program is going to make sure if something is wrong with the inspection, everything has to be done before the home is sold. And the seller's like, I'm not about to waste my time and do that. And then the buyer, I won't say a lot of the times, about 50-50 in my experience, the buyer doesn't have the funds to take care of it prior to closing. So they're like, so that's why another impediment why people don't really take people with down payment assistance or take those offers serious or go that way.
Got it. Okay, I got it. So yeah, the FHA piece always threw me for a loop because I would talk to realtors and they're like, "Can you switch this to a conventional because nobody's accepting this FHA?" And I'm like, some can, some can't. Yeah. So I just wondered your piece. One last question for you: Are you seeing more houses coming on the market at all in your area?
Yeah, I am. Okay. And I think that's going to happen. I've been telling people around, like, for those buyers that are sticking with it and want to buy a home, July, August, September is going to be your time to shine. If you can stick with it, if you can hold out and get through all the nonsense and everything, because it's just that time of year where more sellers are putting their homes on the market. School year is about to end. A lot of people wait till school year is over with to list their home because it's just more convenient to do so. And you have those sellers that have FOMO because they missed out on the huge run up for the past year. And they're like, man, we missed out. The rates are now higher. Let's hurry up and put the house on the market. So I am seeing in the Charlotte area, actually last week, I was actually shocked. It was only, now granted, this wasn't the whole entire Charlotte area because I caveated with 3 bedrooms. So 3 bedrooms plus, you only saw about a 200 home difference between new listings and sold for that entire week, where that's rare. It typically is new listings is a fraction of sold properties.
So that's why I wanted to have you on my show to dig in on the numbers, because that's what intrigues me. Is how many houses, is, because everybody says, houses are going crazy. This is going on. I like digging into the data to say, okay, how many days on the market? How many people are dropping their prices? How many houses are coming new to the market? How many, and so forth. Because again, on YouTube, a lot of times you just have the naysayers. The world's going to blow up. It's what's the? And I post on my channel. I just give you the truth. I give you what the news is. I caption it. I show you the URL. I show you the date. I'm not making this stuff up. It's just and then I give you my opinion.
He has a green screen, and you can actually see him go through it as he's talking about it. So dude, I'm telling you, go check out his channel.
My video. I need you to come up this summer. The pool's open. We can barbecue, and you just need to set me up with all this stuff because you look awesome, and I look like a blurry little ghost in the background. I greatly appreciate you having me. I truly, truly do. When you called, because I emailed you, or I follow you on YouTube, and I found your email and I emailed you, and then the next thing is you called, and I'm like, you got to be in me, and I'm like, hey, dude, you called me. So thank you so much for reaching out. I'm here to educate. just to teach people the facts. I got no agenda. I'm not going to sit here and lie to you. I just want the best for everybody.
Exactly. And I want the best for everyone. And my whole thing is, again, you're going to need a place to live. And if it makes sense, if you're going to be in the property for 3+ years, in my opinion, it just makes sense to buy if you have the down payment and everything like that. But I wanted to present today a program where you have 100% financing.
Yeah.
And so it's a win-win.
Very rarely do you need 20% down. We'll leave it at that.
Exactly. Very rarely. Tell people, again, I'm going to leave your contact information in the description below. I did put your email. What is the phone number people can reach you at? I'm about to type it in the comment section.
I'll give you the whole thing. It's 844 775 5626. And actually, the end of that spells loan, but I'm one number away from the Home Depot or Home Loan Depot or whatever.
Yeah.
And that haunted me one time because they did a terrible job and the guy thought he was dealing with my team and I got blasted. And I'm like, dude, I don't even know who you're talking to. And then he sent me his loan papers and I'm like, that ain't even me. So it was the Loan Depot.
Yeah.
So that's why I give out the full number now. So I would love to talk to anybody out there. Basically, within the next couple of weeks, I'll be licensed, federally chartered throughout the whole country. I'll be able to help you guys. And again, we just do what we do. I've done it for 30 years and we just give you the facts and your options. So that's it.
Perfect.
But I thank you. I can't thank you enough for having me today. I truly can't.
No, I appreciate it. We had like over 90 people at one time. So again, thank you all as well for watching and being part of this. Again, I've flooded your YouTube screens for 4 days out of the last 5. So I appreciate you continuing to come back. And again, just trying to provide you value to make your journey to home ownership, whether it is your first home, your second home, or an investment property, a little easier, a little smoother. And again, we just want to be a resource. So I appreciate you for rocking with us. You enjoy your evening. And I should have a video coming out, a recorded video coming out later this week. But talk to you later.
Thanks, man. I appreciate it.